In the EU, there's one thing that's for sure. Deflation is a major part of this region. You can't stop it. Even with tens of billions being printed every month and the ECB even directly bailing out companies month after month, they are still struggling to keep it alive. They have claimed that they will reverse course on the money printing, but of course they could never do that without completely collapsing the EU economy. So what's going to happen? You came here for the truth, so let me unveil that for you. Today we're going to look at the ECB. I want to talk about mortgages. I want to talk about derivatives and so much more. Let's begin. The ECB balance sheet as a percentage of the Euro GDP. Now you can see this for yourself here, what has happened since the financial crisis, clearly going higher and higher. And when you look at the G3 central banks, you look at the G4, the G5, I've talked about it so many times before, it directly correlates to the US stock market. Here you can see what has happened. There is no way that they will ever be able to reverse course on this policy of increasing their balance sheet without directly affecting the stock market. If it comes down, the stock market comes down. That's a fact. In this area here, you had this sovereign debt crisis. So money needed to be printed. Now they tried to reverse course, but of course it could never, ever stop. If they were to change it, they would have to quickly retrace their steps and continue on. Why? Well, because they have been the only one buying into these markets. They manipulate these markets. That's the ECB. The same goes for the Bank of Norway, the Swiss National Bank, Bank of Japan, and just about all other central banks that I'm aware of. Now the CSPP, I always talk about this. I always get questions about it. CSPP is the corporate sector program that they have, which is basically bailing out, let me just say it for what it is, bailing out companies in the EU. If you look at it, it's basically every single company. And the most notable brands are all at the top of the list. Everything you can think of, all of the biggest brands out there are getting bailed out. The pace of ECB purchases has notably increased in March. Here is March. Here is the increase. Looking at, this is the dotted line here is the weekly average. You can see how it's gone beyond that. And this here is the weekly ECB CSPP purchases going into, it's truly an extreme amount when you think about it. You're looking at tens of billions of dollars that are being printed from the ECB every single month. You know that this is not a healthy economy. You know that this is a deflation that they're trying to withstand, and there's no way that they can ever change course on all of this. So what needs to happen in the EU is that banks need to fail. And I hate to be the one to say it, but that's just the way it is. Banks need to fail and major corporations need to fail. And in doing so, there would be a temporary sort of upheaval. But in the longer term, I think that would show that their currency is very strong. They're willing to allow companies to fail in order to be able to preserve the integrity. Of course, the chance of that happening is zero. Moving on. All right, looking at this information, we all saw what happened during the housing crisis, and that was an expansion of derivative products. Well, guess what? They're back. Issuance of securities backed by riskier U.S. mortgages roughly doubled in the first quarter from a year earlier as investors lapped up assets blamed for bringing the global financial system to the brink of collapse a decade ago. Home loans to people with scratches and dents on their credit histories dwindled to almost nothing in the aftermath of the crisis as litigation-weary lenders retreated to patch up their balance sheets. Over the last couple of years, a group of specialist firms have begun to bring the loans back, navigating a dense web of new rules up to protect borrowers and investors in the $9.3 trillion US home market. It's a huge market, and obviously these companies want to tap into that. And what do? Well, they take debt that people have, credit cards, mortgages, all these different types of debts, and they take them, package them up, securitize them, and they make a profit from it. Okay, you don't know anything of that as an individual. You have a mortgage. Well, you don't know what's happening behind the scenes, and unfortunately, they are actually profiting off of it and taking very, very, very risky bets. Last year saw the issuance of $4 billion of securities backed by loans that would have been called subprime before the last financial crisis. Okay? $4 billion worth. Now, $4 billion worth in the grand scheme of things, sure, it's not that much, but that's enough to basically spark it. You don't need that much to cause that effect to occur. With the pace picking up in the later half of the year, the momentum has continued into 2018. Deals worth $1.3 billion in the first quarter, twice the $666 million issued the same year prior. Okay, it goes into more details of what's happening here. All I want to tell you is that these whole mortgage-backed securities, derivatives that are existent in the financial realm are going to expand, and they always do right before the end. Okay, I don't know what's going to be that linchpin, that thing that basically pulls it all down, but I assure you this is not a good sign. Mortgage debt outstanding by type of holder, individuals and other holders. Look at this. I mean, surely, okay, this is the 50s, 60s, 70s into the 80s, right? But looking at it from the year 2000 even, or the 90s, where basically interest rates start to get lower dramatically, the stock market's rising, housing is rising. You have an extreme level. Now, even though there was some deleveraging that occurred, taking it for what it is, I mean, people simply take on more and more in their mortgage because they're being told it's a safe asset, this is a good thing to do, put down the minimum you possibly can and buy a car, go on vacations, it's all good. Big mistake. Burns Affordability Index, okay, talking about the housing here. Index ranges from 0 to 10 based on the relationship between the median household income and the annual housing cost. Mortgage plus taxes, insurance, and mortgage insurance for a home equal to 80% of the median priced home. This is where we are today. And unfortunately, it has gone beyond affordable. And looking at it throughout financial crisis timeframes, you'll see the same issues that occurred. Not a good sign for where we are headed. Well, ultimately, rates are rising, and this is going to present itself as a big problem. They are rising, just inching up slowly, but every single time they do this, they bring themselves closer to destruction. You can't have this effect without it causing a problem. And what are they going to do? Well, they're going to start dropping it faster and faster and faster, try to revive the economy. Now they're going to be able to actually go into the negative next time around. That's the only way they'll be able to resolve any issue. But I think they'll like to cause a good crash. So these are the biggest companies in these particular states. If you're interested in looking at this, whether it is Amazon, Apple, Exxon, Walmart, look around. You can see big companies, very, very big companies. And it's just something to note. To take a look around, look at the companies, look at the influence that they have, and look at the politicians that are somehow interconnected with these companies. Maybe they've gone from a high position from one of these companies into positions of government or the other way around. It's really interesting to try and follow that. If you want a really good resource, I've shown you here before, Muckety. Muckety is a website that provides people with the ability to link different companies, different people, institutions, and everything else together. And it does it in sort of a web fashion. It's really, really excellent. That's Muckety. So you'll be able to see that there if you're interested. Okay, next, taking a look at the chart form. Just seeing the revenue that these companies have, whichever one you're looking at here, Walmart, Exxon, Berkshire, all of these here. And speaking of Walmart, Bill Simon, former Walmart US CEO, said that Congress should look into splitting up Amazon. They're not making money in retail, and they're putting retailers out of business. They've operated its retail segment at a loss for decades, subsidizing the retail portion of its business with profits from its other areas, such as web services. It's anti-competitive, it's predatory, and it's not right. It's not going to hurt the big ones. And it goes on talking about Walmart, everything else. But essentially what I wanted to note here is this. If there were two companies, one became so massive. Okay, let's just analyze this in a vacuum, okay? There are two companies offering some widgets, okay? Let's just say cell phones, okay? Two companies. There's Apple and there's the GPS phones, okay? So we got GPS phones trying to compete with Apple. Let's say they both started in the same year, same money, same everything, okay? GPS doesn't do so well, but Apple starts doing well. They release the iPhone. They're selling like crazy. The business does good. They hire more people. Suddenly, GPS phones, they're not doing well. You know, they have 6 employees and ultimately they're struggling to get by. They have to lay people off. There's a little tight spot that they encounter. And Apple, meanwhile, is just doing so great. Okay, they're doing better than ever before. They are able to, wave it in everybody's face. The question is, should you then, in that case, split up Apple? Should you talk about the fact that they are operating potentially at a loss to get people in on other services? They're doing things that other companies like GPS can't do. Think about that. What do you do? Does the government step in? Do regulations need to be put in? Or is this the free market? Now, if it was actually the free market, I would say that's just the way it is. If one company goes down because they're not offering a better product or any sort of circumstance that could be there, then I would say, well, that's fine. It's just the way it is. Some companies do well, some companies don't do well. But that's not what we have today. Today what we have are certain companies in a revolving door with government, and they completely control the outcome of how businesses will do. Venezuela, serious situation. I just wanted to show you this. This is on the black market exchange rate. It's done. It's finished. This currency is destroyed. There's no chance in this ever recovering, ever. Just since the beginning of 2017 till today, it is, as far as I'm concerned, completely devalued itself. The money, the currency that we have with us today, no matter where it is that you live, is being devalued every single day. The ECB right now is devaluing the garbage euro every single day by printing all of that money. Easter eggs get costlier as shoppers scramble to stock up. They're making an excuse for this. However, I would advise everybody to take a look at all food prices. It's got nothing to do with Easter. It's got everything to do with what's happening with central banks devaluing currency. Look at electricity prices. Look at the food prices. They are always increasing in a medium-term and long-term scenario. Sure, there are events that occur that bring it down potentially But usually it's going faster than what we're being told, and unfortunately it is not a good thing because it's making up a larger and larger percentage of people's disposable income. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can take a look through these books if you're interested. The links are in the description below. Take care.